This is a subject which is incredibly dear to my heart, this being women and their money and the sort of the female investment journey. 1 in 3 entrepreneurs are female. Almost 2 million women in Britain have built businesses now and employing people, adding to productivity, and yet less than 2% of venture capital funding is going to female-founded businesses. If women were able to start and scale businesses at the rate of men, the Rose report that was written a couple of years ago suggests that we would add £250 billion to the British economy, which is just such a brilliant statistic. There's lots of chat about women being risk averse, and it comes up time and time again. I would counter with it. I don't think we're risk averse. I think we're risk aware. And by that, I mean that women's relationship with money is different from men's relationship with money. Typically, the risk awareness means that women are more likely to do, frankly, nothing. I mean, leave it in cash or do next to nothing with a disproportionate amount of their money. So we have a problem, but technology can start to do an awful lot. Technology allows you to build a picture, build a visual picture of what your money is doing. When you're able to model something and show it in a way that demonstrates the power of compounding, which happens over a long time, and this is what women need to understand.
What do you think is the biggest barrier that's sort of preventing women from taking that step?
That lack of confidence comes from, I think, an ongoing cycle that started with a lack of exposure. If you didn't grow up with parents teaching you about investing, or you didn't go into a career that was relevant to it, how on earth were you meant to have exposure to that sort of conversation?
Role models are a really important part of this, because, you know, one of the interesting things is any of us, I mean, look, we had Maggie Thatcher, you know, we had Theresa May. So if you think about top female politicians, you can name a female, or, a top author, a top actor, a top athlete, they're a top entrepreneur. If you think about female investors, no one would talk about anybody.
From my perspective, although, a lot of the apps available now apparently make it a lot more accessible, when I see adverts, they're really aggressive. And I've never heard an advert for one of those platforms that is, overspoken, narrated by a female. And it's all about get quick returns now. And you look at that and think, oh, risky, not sure, not going to participate.
Disclaimers are typically saying, your investments could go down as well as up. And it's the focus is on you might lose money. And what they don't say is if you don't invest, you are absolutely going to lose money. Often safe sounds like cash. Cash is not safe. You are guaranteed to lose money versus inflation.
The investment forum around the world will start to change the narrative, because they'll start to see, well, actually, who is our audience? And as the female audience enlarges, the marketing will have to shift. The largest pool percentage owners of single dwellings in this country by far is the couple, the man and wife, or the man and wife is a couple. But the second by far is single females. 19% of all homes now are owned by single females, only 11% for single men. So I think thus far, if we take the risk awareness in as a factor, I think thus far women get the tangible and they get the fixed asset, because like most that are risk aware, they say, well, there's alternative use. I could rent it maybe one day. I could leave this for my children one day. It's a roof over my head. It's like, it's tangible. It makes a lot of sense.
What do you think, or what do you hope will have changed most for women investing?
I think it's really exciting. I think there will be loads of these conversations happening everywhere. It starts to filter, the conversations shift, the marketing angles shift.
Education.
Yeah.
From a younger age.
Yeah, all of it. But I think it's not just education to the women, right?
No.
But I think the mindsets are getting, when it comes to investment, I think they are starting to converge more. Okay. So I'm positive, but I'm cautiously positive in that we've got to be doing more,
The effort we need to.
and it will take longer.
Go out there and socialize this stuff, spread the word, use your networks, reach out to people, take on board the things you've heard today that make sense, discard the things that haven't.
I want to look at investments now. And it was interesting because I went to all these wealth managers, and like Charlotte said, I didn't like what they were saying and I didn't believe in it. So I tried things myself and I failed and I made money, and I found really, really interesting ways of investing. I mean, alongside, obviously, I work 90% of my time in my company, but I did it myself. I found 3 different bridging loan companies. I do Bitcoin trading, I do Royal Mint, and I mix it up. I did property investment. And that's how I invest. It's a little bit of a different way. So I do quite a lot of trading.
In 2015, I'd made all this money in private equity, and I was like, oh my God, I'm not going to give this to an asset manager or a wealth manager. I best I best do something with my own money. And then I really spent time educating myself in 2014, 15. My motivation behind my businesses was always one of, well, I saw failure and I'm not going to fail, but I have failed 1,000,001 times. But today, what I predominantly do, my business partner and I, we have a business across London and Dubai. We trade the financial markets. I have a thematic long-only US equity strategy. We have a discretionary FX currencies and commodities strategy. And I am I'd say pretty full-time property developer.
I always knew I wanted to do my own thing, and eventually that brought me back to London, where I did my undergraduate degree, and I started a residential freehold investment business, so buying ground rents from developers of apartment buildings. And then I pivoted and I got more into the capital raising side of things. So I started raising capital for these property developers. Initially focused on equity and then branched out into debt.
After some difficult years in fundraising, and became really, really interested in data centers. So that was the moment where I was like, oh, I really want to go off on my own. I am raising capital, yes, and trying to do the first deals. But the first supporters and the first people to introduce me to the people who have helped me thus far have been women in this network.
Have people around you. It's such a lonely journey, and you can get there faster by leveraging other people's skills as well.
This echoes what you were both saying, but I think waiting until you feel confident enough to do something, it's probably not going to happen. I think confidence comes after action.
And I sort of realised how much we really need to ramp up the conversation and speak about women's wealth and the investment opportunities that are out there and available to women. I definitely have found that women are open to taking risk, but we want to understand it. We want to understand, what level of risk we're taking. And this has really been proven with, putting ourselves out there in front of women. At the back end of 2024, only 17% of our investor base was made up of female investors. Since putting ourselves out there, since putting our investment offering in front of women, that figure has now grown to almost 30%. It needs to be more easily available. So, this is why it's important we start the conversation and we start talking about investment options, journeys, goals, amongst our friends, with our partners, with our colleagues, because when we start talking about it, it becomes part of our everyday conversation.